let's take this off days for now. And this one too. So on the daily, I talked about this being a bearish order block. Um, Ideally, I wanted to see Friday actually just take out the low of this, because then I would expect the next candle to come back up into it like it did and then drive away. Um, so that was kind of like my only hesitation, was waiting for a daily candle to break, close below this basically, which happens. You guys have seen that pattern before with order blocks. Sure, we could find another example on the daily. So this would be a good one right here. So you have an order block that's placed, doesn't close above it. This one closes above it, and then the very next candle runs back down into it, and then we get this movement away. So kind of a similar situation. What I was looking for was, since we rejected that higher time frame point of interest, we would create a bearish order block and kind of get a candle that closes below it, and then the next candle would run into it and then reject away. Um, we didn't get that, so we might see a return somewhere into this order block, which is possible. So let's say we don't close this fair value gap today. Say price kind of rebalances part of the day. I'm not saying that it's going to, but just a possibility. Um, or it might close it, and then tomorrow we see a return back into it, or we come down a little lower and return back into it. That's kind of what I'm looking for, because then that would demonstrate that we're really looking to expand out of here. On the higher time frames, sometimes it doesn't go as clean as the lower time frames. So we'll see how today closes. That's kind of what I was talking about, as far as like when the candles paint, like they're painting in a specific order because it means something. And so that's the whole premise behind always like studying price action. If you can study price action and pick up on how the candles paint, then you'll be able to see why the daily's doing what it's doing, and the weekly. If we look at the weekly, see our points of interest. Same thing, weekly has a fair value gap that we're in. Still have more of the week to go. Um, and we have this imbalance down here, which is that imbalance that we saw in the daily. If we go to the contract, we just have a huge fair value gap on the weekly. And then we got this imbalance right here. So let's see if this imbalance starts at 144.40, 144.28. Okay, so pretty much the imbalance for the continuous is like right where this fair value gap starts. So this could be, if you're using this as your chart to take higher time frame points of interest off of. I think that this could be a good overall target. Um, we might see, let's see, this is 148.69. So we might see an initial dip into here and a reaction as you could kind of treat this as like a order block. Same thing like this. Price moves away, comes back down into it, even though it has a very small candle body, but the high is 135.03 and the low on here is 135.150. So it does dip back into there before taking off. Candle closed above that weekly candle. So it's the same principles repeating over and over. So then I would expect that initially there might be some reaction hitting this level. And if it closes, I think it's the same thing pretty much. If it closes the fair value gap, which it looks like we're about to do here, um, we would see some sort of initial reaction. So we do have on the 5-minute time frame, we do have equal lows, and that could be a run on liquidity, which would give us that rejection. All right. So back to the daily. We got that was our current draw on liquidity. We got there. Everything's looking good. 4 hour. So your 4 hour chart, order block, last up close candle, and then price comes down, doesn't break this swing leg, and then it just kind of consolidates in here. And then what do we get this morning? The manipulation right back into that order block. Okay, so these are placed purposely to return price to this area to pair orders. So you have an old high right here, and that'd be more prominent on the lower time frame. Runs that into the order block, and then we have a nice rejection out of there. So if we're continuing with our bias that we've hit this kind of major point of interest, here is okay, we still haven't gotten down below equilibrium. Okay, so we have a 4 hour fair value gap that we just touched and showed a little reaction to. Equilibrium sits right at this 4 hour order block. So I would expect maybe price to come down here, and then maybe this would be a good mitigation block where we have a swing low, price runs up, and then we kind of come down and price might return to this area. So this also is that daily order block. So again, that's kind of giving confluence to the idea that price would return into there. Now we're just looking at it on a smaller time frame. And so why would it get come right here? Because this is a mitigation block if we see price continue to move down. And what do we got? 42 minutes left, and create some sort of fair value gap, which we have so far. So I feel like as long as price doesn't really retrace back up too high, and we can keep somewhat of a 4 hour fair value gap, then that would be could be a good entry for further shorting. I go to the 1 hour. I was thinking it might, uh, originally I was thinking it might run this previous day high just because you had equal highs right here and a fair value gap on the 1 hour. So equal highs, fair value gap in a 4 hour order block. I was like, oh yeah, it makes sense. Like be a good place for price to run to, but we just took out Asia highs. Let's see, was there anything else on the 1 hour? Caught my. So these are on the 4 hour, like these are good things to mark where you see price always like run away quickly. It's the same thing that happened right here, right? It's like we have these series of up close candles before a huge movement down. So now you're looking at, okay, price should return back to here. And if our bias is short, then we should see great movement away from there. And what happens? It forms an order block running into a previous order block, and price again moves quickly away. And so it's really about seeing this expansion out of those areas. That's kind of a telltale sign. Um, and so just like we saw here today so far, as we had some great expansion out of this order block. Moving down to the 15. Um, so we've talked about like unused parts of the order blocks. So if we take this up close candle, this was actually what I was using yesterday to establish my short position. Um, and because because the movement was so good last night, if we go to a 5 minute chart, um, I'm starting to flip my strategies a lot more now, where I'm not targeting this overnight because there's so much time left. So if we're already, if it's only 3 o'clock, like London Open, boom, it makes a huge move down. My runner, the target was right here, this order block that hasn't been touched. And the reason being is because of after that rebalancing, there's so much time left that what happens, London kind of gets into a high resistance, like small reversal after filling in. Let's see, where did it actually get down to? So if we go to the 15 minute, it kind of runs back into this order block over here. Okay, and then you get there the Judas swing. And then what pairs up with this is that this has been used twice in Asia. So then we're looking at, we have the 4 hour and then we have this part of the order block that hasn't been used. And price runs into it. And if you look at the candle bodies, they never even come close to breaking CE of this little body. It stays right down here. So I think these are good things to study and see how price does that, and that helps. Like if you're taking a position and you're like, oh yeah, we should be nailing these. We got to remember how much time's left. You don't want to sit through or have your runner, not make as much as it could. You got to look for certain points along the way. Like this could have been just this low could have been one for the runner too. I had three contracts, and this was I took two right here. Basically, I put one at the top here and then one right at the mid here, thinking that on the higher time frame it was only up close candle, basically on the 15-minute. So a down close candle should come through here, which it did. And that's when, and it timed perfectly with London Open to displace right through all these swing lows. So time always has to be a factor for where your targets are going to be, and allows you to get into trades, the same trades with the same bias over and over again. And so 5-minute, what do we get here? Yeah, same thing. Basically, price has been rejecting, and that's all confluence. The same order blocks are put in all in the same places. So we get this swing low. Um, thought we had, almost thought we had relative equal highs right here. Maybe not, but swing low runs it out, and then maybe that was on the 1-minute. Oh yeah, it was on the 1-minute. Thought we had equal highs. But then you get like this displacement through here, and you have a fair value gap. Into a higher time frame. So this is your 2022 model. So this was when I said there's two silver bullets. You had this one where it comes down, runs out the liquidity into a fair value gap, and this was a $1,600 play with three cons, just from here to here. And then here's your 2022 model setup. Institutional order flow entry drill, and then nice little rejection out of there. And then we've just been working lower, lower, lower. We have equal lows right here, so I assume with our bias that we're gonna. But here you go. Here's a 1-minute order block that you can see prices holding. You look at the candle bodies, it's holding CE of it very well. Um, Midnight open, another area of confluence. Price runs above midnight open. But just the same candle pinning concepts over and over again. We might, like I said, we might just close in this fair value gap and tap into that area and maybe get some retracement and fill in. Okay, so here's a previous low that we displaced through really well. So that same concept of we want to see a previous low show support. So this is like your mitigation block. And it also, again, that also notes going back into the bearish order block. So these, looking at the big picture like that should allow for like patience. Like even if you missed this and then what's placed along with this mitigation block. fair value gap, order block. So all the a previous low, all the confluence for if price returns to here, I'm gonna get short, and I would expect to see some decent movement lower out of this area. And so that's when see if we can look on the 15-minute and find a good example. So far, the best examples are when price has been moving up because we really expanded up quickly. So like this comes down, it's the low on this candle. 150, 170, 150. What's the high on this one? High 151.15. Oh, 151.14.50. There we go. Okay, so that would be it just taps it and then expands away. So it's like these same principles, like I said, they just repeat over and over and over again. Price returning to an order block, kind of consolidation. It's not really breaking the leg. Swing low, swing high, not really breaking it. Finally breaks it. Then we have kind of it drifts downwards, and then we have a return to another order block before it's starting to really make its way down with some bigger movements downward. We took a look at this price leg right here. Again, I would suggest finding when there's a low and a high that's created and price is not moving out of that range. I would suggest putting a fib tool on it because it's going to give you added confluence for how price is reacting based off of the equilibrium, the premium, and the discount area of that range. And so as you can see, as prices move within that range, it's going from areas of discount to premium and just kind of staying within the range. And then that's what we're seeing on the daily. That's that's forming. That's why the candles are painting the way they're painting on on the daily. So you have this range put in. And that's typically your an order block being put in when it goes against the trend of after hitting a higher time frame point of interest. And so in your lower time frames, you can start taking plays within here just based off of uh, equilibrium, premium, and discount. And then we talked about like it's okay to take plays like even just back to equilibrium. Like if you're not sure like where price is going to go or how far it's going to return to, um, these are still great plays back to equilibrium. It's like even if you're, and that's all internal range. So if it's like, okay, we're going to close this fair value gap, we're just going to rebalance it. We don't know if we're going to rebalance it and reject like this, like it's going to use this as a mitigation block or something. These are, you can make a lot of money on those. Like I said, that little silver bullet that was just into a fair value gap, then a run on the equal highs. three contracts. That was 1,600 bucks with extremely like no drawdown basically. Quick, quick, quick plays that can stack your account. 15-minute again. We looked at it on the 5, but a 15-minute order block. So just more confluence on all the time frames of what we would like to see price do. Do you guys have any questions or anything you wanted to talk about specifically or share? Well, we've already broken out of this range. Um, so ideally, like I said, I think today and this week, I want to see how like these candles close. Um, and hopefully this candle closes somewhere in here. What do we have Tuesday? Oh yeah, I think yeah, I think Jay Powell is talking Wednesday. So I would definitely, since this daily is going to close outside of this, it would be nice to have another like kind of down day, and then um, maybe come back up to here, and then come down a little bit lower, and then J Powell come back up into this order block and reject out of there. I just don't want to get too invested in any kind of like real expansion out of there, just because we've been the market's, you know, it's been hot. It's been running like, so we don't necessarily need to like expand out of here. We could just work our way down back into this area, and we could have a lot of overlapping days back down there, and then some sort of consolidation. So that's that's kind of what I'm looking to see happen. What is so from the daily? I think I need to get rid of that now. I don't think that's yeah, that was a daily fair value gap. So again, I want to see, does the candle body close below 50% or not? If we close out below 50% of this, um, I could see some overlap and running back into this and then rejecting and starting to move lower. And who knows, we could, again, we could have Wednesday J Pow talk, get a little bit overlap back up and start moving into here. And then we could see 146.89 on the daily. What was that on here again? Nope, up here. 146.89. That is. So that's kind of digging into this order block here on the September contract. So because we have this down close candle and price really runs away, like to me this is the obvious draw on here. This is a small fair value gap. We didn't if if we were gonna reject out of here, I feel like we would have came down and we would have dipped into here and then rejected out and then started to make a move higher, like using it as a point of like just dipping past equilibrium and using that fair value gap for that. But the fact that we stayed above it for 3 days makes me lean more towards that we're going to fill it and get into this order block because then now we're balancing this area. So then if price is going to continue to move higher, this area has become balanced and now it uses an order block to gather longs. Does that make sense? And so we have this. So this could leave this open. And so on the continuous, we would see like a tap into this as the order block and a rejection. It might not necessarily fill this right now. And so we've seen a little bit of the kind of a 2022 model on the smaller time frames right up here. So let's think about that same model on the higher time frames. So if we come down here and we create a swing low, and then we get another run, our second run on liquidity, we have order block up here with a fair value gap. This one hasn't been touched. We have a fair value gap up here. So we could see price again move up higher and create that second run to a higher time frame point of interest before maybe looking to make a stronger move down. That's just that's just a thesis. I'm not going to say that's going to happen, but so here's kind of a similar situation that we're in right over here. So see this, you have this being put in. This doesn't actually close below it. This one closes below it, but comes all the way back up, and then we just have a little small manipulation up, and then boom, it comes down. But this candle does reach into here as this came all the way back up, but it did close below this. So the first candle that closes below, the next one should also reach into the order block. That's just another example on the higher time frame. Doesn't always look the same on the lower time frames. So yeah, I'm trying to stay nimble, just because I can't rule out any, like we're not showing a major rejection from right here. Like this week, we haven't even we haven't even broken this week yet, and we're getting into the second week, and this is a weekly candle. So that's not necessarily showing like a major rejection from this area. Whereas you have this that runs up into here, and then you have weeks that are just really 3 weeks. This is a huge week right here, but these two really take out these two and dig deep into this one. You have a immediate rebalance. So that's what I mean when you're looking at price action is look on different time frames how price actually moves when it's actually rejecting something, like showing a true rejection from an area. And the month. Okay, so the month. Okay, we haven't got into this order block yet. Okay, so yeah, there's 4 days left. So we could close where we come back down here again. Here's a here's an example of price running up, wicking back down, and then a real strong movement back up. So we could see this come back down and see how you get like overlap of the wicks. We could see this come back. What's this? 145. So this is like that same. Again, we're talking about like the same levels that we were looking at in the smaller time frame. So just we'll just mark that with red so that we can. Okay, all the time frames. So we still haven't gotten to the monthly order block. Just shy. So to me, that tells me that there's going to be another move up because if we are going to go short, they're going to um, gather shorts in this area. Just because we got so close, it's like the daily fair value gap that we were just looking at. Price gets so close to it, but just doesn't go in. To me, those are signs that I've seen over and over that like that means like okay, it's not going to go in there because it's probably going to fill and it wants to gather more short orders or catch people off sides. So we have that. So week. Okay, that puts us out balancing this weekly fair value gap. Okay, that puts us into this daily order block. Okay, general area. And that puts us about halfway through this void. Again, into a, I guess you call that an order block, but it's more of the daily order block. But almost like not a break in structure, but just a swing high that hasn't been retested. Old highs come down and get retested. And then that red line also puts us at possible OTE for long if we don't break this leg. So see how you're using the higher time frame to find confluence for areas where price wants to draw to just by just by looking at like how candles typically tend to paint. Oops. Let's see. I like to find examples on lower time frames because I feel like it's easier to digest. Let's see. This one kind of went into this order block right here, moved up. But again, it's looking at like as candles uh, move upward and looking at previous highs and how they come back down into those same areas and really like completely balance everything before making like a higher run up or a run down. And those are monthly candles, so they're not going to paint exactly like the lower time frames, but the principles are still the same. You can mark those like we did and see how it. I think there's even a new week opening gap right there where we marked that. Mm, let's see. You guys get the idea. Here's kind of an example right here where it wicks back down, and then you get kind of coverage of that whole wick coming right back up. So it's like price will do that. Like it'll pop up, and especially into an area of interest. Okay, like here's a fair value gap. This is a smaller time frame. It's 5 minutes, but like look how like if you were thinking like, oh yeah, I'm gonna get short right here because we're gonna take out these lows, and you're like, oh cool, price went up in here. It's rejecting, but it's looking to make the higher high. So it draws down all the way, but then boom, it immediately comes up. Just stop short of there purposely, comes down again, like, oh, okay, rejecting an area, and then boom, next candle runs up. But it's sequentially made this three candle run, and then again, like, creates equal highs. I'd have to, let's see, what's the high of that? 150.8750. Okay, so equal highs, same thing, 150.8750. Returns back down to fair value gap, charges up. So this could be a monthly candle where we wick back down, and it's like, what is that? What message does that send to people? Oh man, we're running short. It's rejecting. It's going down again, and it might leave this open. This is balanced. We could take a fib and do. Let's see. This here's a swing low. So let's say they leave that open for now. Okay, we'll do if that's a measuring gap. Okay, so that's a measuring gap. Here's 1.5, which puts us into that order block. Two gives us almost relative equal highs. So we could see the month come back down and then have a solid month that takes us higher. And there's different formats of that. Yeah, so there you go. So that would be a great example if they drive the price lower, finish out this week, and then July we start working higher, and then take out June's highs and leave this open for now. Here's an example on the opposite, where there it's at whatever point of interest. I guess we'd have to. When was this time? This was this was the COVID. Okay, so the COVID manipulation leg, and we're at two. So it pretty much hit two fib projections. Eventually, we're gonna have to start doing this again because there's not going to be once we get above here, there's not going to be anything to look, any structure to look back at. It'll be looking back at this side of the structure and looking for points of interest that price might return to. That hits the exact same thing. That manipulation leg basically puts at the exact same place. So I think if if you start kind of like focusing on why it's doing what it's doing, and you can see those repeating, like how candles paint over and over again, and what they like tend to do, because obviously it's not 100% of the time, but there are definite um, like areas of confluence of like you should expect price to like retrace and then want to go right back up. And so if you can watch that in the 5 minute, the 1 minute, the 15 minute, and just see examples of it. Like here's a good example of that. Oh, look at candle body. It didn't get into this fair value gap. Held CE. Came down and rejected all the way up. Like it does that on purpose to if you're on the wrong if your higher time frame's off, people might go long right there. And then they get wrecked on that next candle. So that's why I feel like the importance of making sure your higher time frame, and that's why I kept reiterating that. Okay, this is still my current draw on liquidity. Is this fair value gap? Yeah, we're gonna have Judas swings and retracements, but if this is my current draw on liquidity, then anytime price starts reaching above equilibrium, I'm finding shorts, and eventually, look what happens. You get a day where if you got into that 5 minute short up here, that 1 minute fair value gap after the 2022 model, basically, yeah, you're cruising big time because you're in line with higher time frame. And if the two cons with here, set your drawdown for the top of this fair value gap. You're risking $530 and you're gonna pull off 6,500. Just that's just taking profit right at the top of the daily fair value gap. Then what if you leave a runner to CE? You're looking at like another that's 2,000 something for two cons, so you're looking at another $1,000. So now you're up to like 76. But you have bias and reason of why you're doing what you're doing. All this stuff is just to get people off sides. The higher time frame draw is price consolidating right above this daily fair value gap. And this is a great target because even if it dips in there and rejects and wants to go higher, it still is going to get into that fair value gap before moving higher. Um, so that's where like I showed you, you start marking your time frames. Like how I just went from daily down to 4 hour. So daily, like you want to talk through each candle, like, okay, we're driving away, we're going to put in an order block. So I would expect price to cover somewhere in here and continue to make uh, daily candles that are lower, targeting this. Okay, so then you start looking at, well, what's on my 4 hour? And then that's where, okay, even before this right here, it's we have price run up, and where does it run into? A previous 4 hour order block, and it runs away. So then now this up close candle becomes an order block. So then after price ran away, comes all the way down here, and then what does this next green candle do? Comes right back up, and what does it do when it touches this order block? It rejects out of there, and then what does the very next 4 hour candle do? It comes back down. So that right there is showing you that whenever price returns to this area, they're pairing shorts with anyone that has stops, and they're running it to collect more shorts, and anyone that's going long is getting wrecked because the moment it starts getting into here, price runs away from it. So then we just have a consolidation period. So then we're looking for price to return to this area again, and we're looking for shorts in this area. And then you just keep working down the time frame. So then just go to the 1 hour, and you can keep that highlighted and start looking, okay, well, what do I have on the 1 hour? And then the 1 hour tells the story even more. So now we highlight, okay, where is price rejecting out of? So we have up close candles, price runs away, completely closes below it. What happens when the next time price runs into this series of 1 hour order blocks? Oh, big rejection. What does price do? And it runs right back into that 1 hour order block, grabs stops above here. Man, big rejection. So then you can highlight these areas and start to narrow down. Okay, look at the candle bodies. They don't go above CE of this 1 hour order block now. And we're within a 4 hour order block. And so you just start looking at, and then we talked about this earlier. Okay, now we're at the 15 minute. So you have this kind of same thing. Find where price really rejects away from. So I can narrow this down to, I can move this one to this 15-minute right here. And now look where I'm starting to get into. We'll take this and we'll make it even lighter so it's not as distracting. Yeah, because it's building confluence. It's order blocks within a 4 hour, order blocks in a 1 hour. Now there's order block in a 15 hour that's being respected. Look at one, two, and here we go again. Magic number three. Third time in this 15-minute, boom. Now we get the big drop. But it's been gathering orders every time it gets in there, and that's the confluence of the 4 hour, the 1 hour, the 15-minute. And so when you see that repeating on multiple time frames, that's that's the algo tipping its hand, saying, "Yeah, we're getting ready to make our move. You just got to be patient. You got to get in at the right spots." It just takes time because you really have to step away from the 1 minute and 5 minute chart, and you really have to keep evaluating, like, okay, what's the 4 hour showing me? What's the 1 hour showing me? And when you start seeing like certain points where like price is really rejecting from, and then the 15-minute shows it even more clear. Like that's a great rejection, big move, consolidates, comes back up into that same area, another big move down, and then it just kind of stays, hovers, pulls some discount prices, right back up into that premium for the third time into that 15-minute order block, and then now we have the third move down, which is the big move down. And then look at what the 15 minutes doing. Order block, order block. And then this almost looks like it's either reaccumulating for more or it wants to use this area to rebalance. That makes sense? Hmm. And if you, hmm I would keep I would keep a screen up that at least has at least a 1 hour chart on it because the 1 hour chart's going to tell you a lot of stuff like look at these relative equal lows that were put in. Like price, if price was going to come down into this at this point in time, it would have done it. Like there's a reason why it stops right here and creates these equal lows. You know what I mean? So we've seen that enough where it's like, okay, um, it's putting these in on purpose. Just like I don't know if you're in the chat yesterday afternoon, but um, like Uki got into a good trade running back up into this order block from a 5 minute fair value gap. But what it do at that 5 minute fair value gap, it put equal lows right there. That's like a sign, like it's saying, yeah, we're not really using this to run longs because the higher time frame short. So we're gonna come back and we're gonna sweep those. Those are like little key things to me. That's like cool. That's just adding more confidence to like, yeah, the bias is higher time frame short. So I'm looking for shorts every time I get in. And look at we had the our fib on here, and what does it do? The hour runs just into premium, goes back into discount. All it has to do is cross over equilibrium into premium or discount to make a move to the other side. And it sets equal lows, then runs back into premium, back into that. Here's the third time into that 1 hour order block, 15-minute order block. And then we have a nice move away. Then same, here's another good example of what we talked about earlier. Order block, okay. What's it gonna do? It must know that like it's accounting for people understanding the algorithm a little bit. It has to because that's the only reason why it does this. Because look at that. A down close candle, price runs heavily away. So what would that, and then look at price runs down into this and then shoots up. So what would that get people to do if price runs back down into here again and shoots up? Like you're looking at like, oh man, this order block. So if you're on the wrong side and you're not paying attention to the higher time frame draw, this whole thing is really trapping you to go long. It rejects out of this after like you could say this is an order block, which it is, but higher time frame trumps this. So eventually it's going to run through that. But it gives you this down closed candle where it wicks heavily back up, showing like, oh yeah, we're rejecting that area again. And then what does it do? Boom, it wipes out that order block in the very next candle. Oh, yeah, we get that this gap right here, like from this candle body to that candle body. Yeah, it looks like they come right up into this wick 3 times and then that 151.48 level. Yeah, and see that's again that's a great point, and I think one of the best things about this community is that there's so many ways to accomplish what you want to accomplish. If you want to use the regular trading hours and that makes sense to you and you're successful, do it. I think the thing with ICT is he's giving us like you don't have to use every single way all the time to make money. Like stick to what makes sense to you and what you understand and what works for you, and just repeat it and just learn patience to wait for those things to happen for you and then just keep repeating it over and over again. For me, when I explain stuff, this is how I see things and how it makes sense to me. And I'm just sharing that with you guys. It's not, if you guys have your way of doing things, please stick to it and be successful at that. And you guys, yeah, you're welcome. It it definitely takes like practice. Like we see these things happen, and it's like, look at all this time that's gone by on the 5 minute chart. Order block got put in on Thursday. Here's a 5 minute chart showing price coming back up into those areas, rejecting, and it's you want to the draws down here. Say it's not happening, it's not happening, it's not happening. So then you start thinking, oh well, maybe it's holding this, and you can get and it's going to do stuff to get you on the wrong side of the trade purposely. And I showed you multiple examples of what it does, coming back into order blocks and wicking away. I mean, like tons of stuff that looks almost like what it would do if it was going in that direction, higher time frame. So I think that's the probably the biggest key, like you said, for everybody. I know it is for me, is just learning that like patience of like, okay, the draw's still there. Put up my tools. Let's put up a premium, equilibrium, discount, so I could see how price is reacting within that range, and then just have the patience to wait. And that third time's a charm keeps popping up quite a bit. It's a good. It's pretty good about repeating that, moving into a order block or fair value gap 3 times before it takes off and breaks that dealing range. Hmm. Oh, okay, on the monthly. Is you Oh, right here. Yeah, your first projection. It's like, and then one we're looking at taking out highs. So yeah, I mean it works. Stuff works well. Hmm. Yeah, yeah, I agree completely. I think that's these tools are going to be great for that. Hmm. Yeah, look at that. 1.5. First rejections at the first comes back up. Another consolidation area right around one, and then hits the 1.5 from the last manipulation leg up, consolidates, and then breaks that. Yeah, I've been trying to use it more and more because I think, again, I think in the future it's going to be necessary. Because otherwise you're gonna paper hand positions, and you're not gonna know when to like, oh, when can I expect it to expand, and like where to. So it'd be good to get these on the like on the daily chart when the market starts making new highs. That's about almost 2.5 right there. Measure that leg. The manipulation leg back down into a consolidation. Gives you a nice target. So then target just above it, and that's where we hit. All right, anyone else? Comments? Yeah, it's recorded. So I'll post it. Anyone that missed it wants to uh, go over it. Oh yeah, you guys are welcome. I really do think that everyone in this group is like doing very well for how long we've all been learning this. Seeing a lot of success from a lot of people. So it's inspiring. It's really cool to see. I enjoy watching everybody, this whole group. It's been a fun journey. Yeah, I'm probably gonna I'm gonna go work out. Yeah, go for it, man. Um, I think just from like constantly like watching price action and like um measuring stuff, and so finding and then watching how like the candles paint, and so it just kind of has given me where like if it's gonna paint a certain way, then it's looking to do something. And I think because there's been so many times where like I've back tested or I've missed it, and then I go back and I look how it went down. I'm like, oh man, like dude, it's so obvious. That's something that I would see on the 5 minute, and then like I totally missed it on the 4 hour. It's like, okay, well, why am I missing it when all this stuff repeats on all the time frames? So I think it's just looking at that and then yeah, chart reading, back testing, and then really just marking out and identifying these things. Kind of how we did this like sequentially. And again, when you start with the higher time frame, then it's like you're expecting the candles to do a certain thing. And I talked about that last week, but it's we get into this higher time frame point of interest, and then what do we have? We have three down candles. Okay, that doesn't go into this fair value gap. And so then we have an up candle. So to me, this is something that I've seen where this is going to be used as like a bearish order block. So then we're going to have it come up and we're going to have it immediately like covered up and repainted because that's what order blocks look like when they're in the middle of a movement um, to the tournament terminus. And so just seeing those things happen over and over again, it's like for me, I prefer order blocks like that. That's where I like to run plays is order blocks. I think they work well. You get expansion out of them. I mean, here's a 15-minute order block. One, two, three. So this was Friday, still Friday afternoon, and then we have today. So there's three opportunities to have a really great move. And that could just be targeting, a low or back into a fair value gap. It doesn't have to be a giant, giant move. It could just be saying, oh, price is gonna come back and hit this break in structure right here. And what does it do? You get boom down right into that candle. That was the break of structure, which is part of his concepts in core content. Okay, that's a great play. Another one you could say I'm gonna take this play right back into this order block because you're it's just balancing. It's just price is consistently rebalancing and moving from premium discount to premium. So for me, I like order blocks. To me, they're easy to identify. As long as I see price really run away, then it's an order block. It's easy to identify, and you can take them uh, in a variety of different ways. So that's why that's kind of why I see the things the way I do, and that's what I've been working on for myself. And so then I just pair that up with PD arrays. 'Cause I think what's after order block, rejection block, and then new higher, new low. So really, your order blocks are and in core content, order blocks are paired up with expansion. So you're always going to get expansion from order blocks. So you'll at least get some kind of movement, even if you're on a small chart, smaller time frame. Like let's say this order block right here, price hadn't come back down into it, and you went long right here. Well, where could you target? You don't even have to have like you can go against the bias. Take this high, take the swing low, target equilibrium. What's right there? There's a fair value gap and a mitigation block. So you could take that and look how quickly price moves away from that order block. Yeah, the ultimate bias is down here, but still look at that. That's let's see here. I don't know how many contracts you guys are averaging. I like to use two because that seems like it's pretty stop loss right below it, 350, and I'm gonna target equilibrium. Yeah, that's great, and that's just using order blocks, and that's having a fair valuation target, not targeting anything crazy. Just let me get something that's guaranteed. A swing high, definite swing low, equilibrium. That's guaranteed price is going to go there. It has to. It has to get some sort of premium entry before moving back down to where it wants to go. So I think if you can get into that mindset, that kind of helps with just taking, like finding little plays like that. And it helps get in the habit of measuring these price legs. And then you can be confident. And where does it end up going? It ends up going almost back to midnight open into OTE, and then that's all she wrote. So that's what I try to focus on because I think that you can run this over and over and over again multiple times a day. I'm not there yet, but this allows me to get a decent play. Like if you miss this, if you miss this entry, this allows you to get a decent play during the day. And then here's your fair value gap OTE short. And if you're higher time frame, you're on that correctly, then it's like cool. Let me get in short now, and let me target these equal lows. It's another 2,000 bucks, a little more. Boom! Now you got 4 grand for the day just by um, identifying order blocks, identifying when price needs to return above equilibrium, and taking both sides of the play in a relatively short amount of time. 10:40 to 20 minutes. That's freaking awesome. 4 grand in 20 minutes. An afternoon of consolidation. Yeah, so that's it, man. That's kind of where my head's been at and where I've been studying and watching and learning, back testing. Yeah, you got it, man. Of course. Anyone else got anything? All right. Well, if no one else has anything, then I'm gonna get going. Hope you guys have a good rest of your day. Thanks for tuning in. Yeah, we'll catch you guys later.